Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Fed pauses rate hike campaign. Well, as was widely expected, the Federal Reserve decided not to raise its key interest rate target at its meeting earlier this week, after hiking rates at every meeting going all the way back to March of last year. Now, while our central bank allowed for the possibility of further rate increases going forward, it seems likely we may stay on pause for a while here, maybe even through the end of the rest of this year, given that the inflation metrics have been improving over the last several months. Also, since monetary policy takes time to fully work through the financial system, Fed governors want to take some time to see what the effects are of what has already been done, so as not to risk pushing the economy into a deep recession. So at least from the stock market's perspective, it appears that the Fed has successfully threaded the needle that almost no one thought they could, which is tightening monetary policy just enough to cool inflation without causing severe economic pain. Now that the bulls are on parade and valuations are nearing their 2021 peak, the market could get a bit more vulnerable to a downside surprise should anything not go according to plan. For this week's featured insight, the magazine cover indicator. Well, everyone can be a sucker for a good cover story from time to time, right? So, in this past week, the popular investment publication Barron's put a picture of a bull on the cover with the headline, "This market has legs." Some people stood up and took notice. Perhaps they've been worried about the pending recession people have been talking about, and now they feel more comfortable putting money to work in stocks, since the experts are giving their stamp of approval. In fact, the percentage of bullish investors did jump from 29% all the way up to 44% just in the past week, according to the American Association of Individual Investors survey. The problem is, once the story is on the cover, the big gains have usually already taken place. You make money buying low and selling high, not chasing and buying after we're already up 15% so far this year. So if you see a bullish cover story on a non-financial publication like Time or Newsweek, then you'll know to be cautious, as those tend to be very contrarian indicators. Looking ahead, will earnings deliver? Well, the second quarter of 2023 is fast approaching its end, and soon another earnings season will be upon us. Now, the market already expects that earnings will be roughly 11% below last year's second quarter, so that will likely be a rather easy bar to jump over. The third and fourth quarter earning estimates have also been inching lower, but overall earnings are expected to be relatively flat in the second half of 2023. Now, it would seem that given the persistent rise in the S&P 500 index in recent weeks, markets are expecting an inflection in earnings revisions going forward. That is, in other words, they are expected to start rising again. We'll soon find out if markets have a crystal ball into earnings. Otherwise, they will be in for a rude awakening. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.